Welcome to Trading Lounge and the US stocks for the 2nd of July, and it's Thursday, so we look at Alibaba, Goldman's and Exxon Mobil. So with Exxon here, just on the 4-hour chart here, from this low here, we've been looking and counting up here as 1, 2, 3, 4, 5 here for, wave A, and then an ABC here for wave B. And then 5 waves up here for wave C here of wave 4. So if that's the case, then we'll be looking for a move down much lower here for this. Now, we are short, and we're short simply because we noted that we had 5 waves down through here. So we could go short below this level here. And I may have mentioned, or it doesn't really matter, we can look at hindsight as well. But it's the same thing with the trading levels. So with the trading levels, as you know, if we were looking for a move up here, we would be getting the first high above the level, and then we'd get the second high above the level. And then if we were going to go long, we go long here, and also on the second one here as well. So that also accounts for the downside here as well. So when we're looking for the downside here, we would look at situation like this here. We'd be going short here, but of course we can go short here as well, and we may even be able to get a better position in here if that was triggered to the downside, if there was another position in here. So it's the same here as well. So we can look at this level here, and we can also look at this level here as well. So they're places where we refine our entries. So this, technically, the way that I do things can be put under that low, because that's also an impulse wave down there, and under this low here. But I'll leave it there for now. But it's just refining entries. It does appear that we've got this sort of impulse wave down through here. I have to say that this one here had lots of legs in it. It was, really quite powerful. And this one here is reluctantly moving to the downside. So the first thing we're going to move here is we're going to move the stop down to this level here for this. And we are looking to take profit at the 40 area through here if that occurs. But we've basically got the trade now at, very close to break even. So that's good, and we could certainly get stopped out as well. But I kind of don't mind being stopped out here, because I can see that we're impulsing to the downside, but not by much. So, and we'll also be working in, just to let you know, we'll be working, the levels are from 40 to 50. We can just count the Fibonacci numbers, which is 1, 2, 3 that make up group 1 here, and then there's 5, which is the midpoint, and then there's 8 here. So they're just the levels that come in there. There's other levels within 8 there. We've got group 2 that come into that. I won't go into that. So the good news here is number 5 here, the 45, the halfway mark. That 5 is the second strongest number in the market. And what we can see here is that the market's come, as we just talked about this level here, the market's come down through that and retested it, and it's failing the retest. Well, it's only failed the retest if it takes that low out here. But I can also tell you that coming into group 1 here, 1, 2, and 3, the market's going to find support in here. And if it does move down lower here, it's going to bounce around a little bit in here. So, we'll just see how we travel with this. We've done all the right things, except for refining that, but I can't be here all the time. But, it just helps for next time as well for those sorts of things. So we can just put that there, put that stop there, and that's brought that much closer to that. And taking profit anywhere down in here is fine. And the next step that you want to do, you can't move the stop down any closer. You could take, if you're going to do anything here, you'd need to take a percentage at this particular stage here for this. I just think it looks a little bit impulsive up there. Let me just get this count here. 1, 2, 3. A bit high for 4, isn't it? So this would be 1 and 2 and 3 and 4 and 5. So this is a third wave down to 1, 2, 3, 4, 5 down to this point here. So this is 1 and 2 here and 4 here. We should see one more low come in here. So I think what we could do is just look to take a percentage in here as well with this, just to just don't want to see things turn into a loss. 'Cause I can just see the markets reluctantly coming down, you know. So take something, make sure that you don't lose. So if it comes down into the 3 here, the 43, take enough money off the table that's going to leave you at break even, or including brokerage, of course, at that level there. And it's better to pay. Look, my humble opinion is it's better to pay a brokerage than paying it in the spread. I know in the US you've got all these free commissions and things, but I've been around too long to understand that those people that don't charge commissions, they're not giving you anything free. They'll just be front running your orders or doing something. They'll be making money out of you some way. So you need to find out how that is. In Australia, we don't have that. And the same as in Forex, trading Forex too, you know. It's far better off paying the brokerage rather than being stuck in spreads. You always pay for what you get, and you want to be knowing what you're paying for, you know. So when something is free, it's not free. You just got to work out where they're clipping your ticket from. Just sort of the term bucket shops came out of the 20s and 30s when everybody was there, and that's what market makers are, really, just bucket shops. So they'll be playing your orders. So with market makers, they'll be, especially in the CFD world, where we come from, in Australia and Europe, then you know, that you're either going to be put into book A or book B. You're either going to be hedged or not hedged. And that's a typical thing of a bucket shop. Anyway, that's what we're doing there. And let's move on to, say, Alibaba. So with this stock here, you know, I mean, I understand that it's under a lot of pressure from, you know, that they're stuck in, you know, it's trading on the US market as an ADR. It is being under pressure from the CCP in China, and it's being simply rejected in the US as well. But so the count is a little bit tricky here. So we've done okay so far. We went long here. We took profit here and we got out, and then we looked to get into long here, and then I realized that things are not going the way they should be going, so we lifted the stop and we got out at, say, break even. And the market had fallen here, so that was good that we've done that. And I'm just trying to work out this pattern, because I know we've got an impulse wave from here to here, right? And then the pullback here, and then we've got 3 waves here. So with these 3 waves here, it's probably better off to count it as an A wave, a B wave, and then down for a C wave here, which would be 1, 2, and 3, and 4, and 5 coming down here, and then moving off from there. So I'm not going to do anything here for this. And when we look at this little pattern here, so we look up at 5 waves up here, and then we look at the A, and then 3 waves up here, and then a C wave here down in 5 waves. What it reminds me of is this bigger pattern here. Because this bigger pattern here, we could look at this as 1 and 2 here, and 3 here, and 4 here, and 5 here for 1, and then the A wave. So this A wave would meet that A wave, and then the B wave here in 3 waves, taking the top out here. So this 3 waves taking the top out here, and then having 5 waves down here, and then having 5 waves down here. So I can't do anything here at the moment. I don't want to short it. This is also at the 210 area here. That's from the low to from that low to that high here. That's the 61.8%. I better check that before I confirm that. Yeah, so that's about right. So that's where I'm sort of thinking at this point with this. So we're going to need this to come down further. We're going to need this to start. I have to go to the tick chart and look at what we're getting out of this. If we can see an impulse move up here, then we'll wait for the pullback, and then we'll move into this to the upside. But otherwise, you know, this whole thing here. I just don't like it at all. You know, to have an expanded flat at this degree of structure within wave 1 and wave 2 is not really the done thing here, you know. So so it's a bit of an awkward one, this one. So anyway, nothing to do here for this, and we'll look at Goldman's next. So with Goldman's here, the count that I've got from this, from the low here, the best sort of fit that I can see is wave 1 here and wave 2 here and 3 here and 4 here and 5 here for wave 1, or wave A here. So then we pull back in here for an ABC for wave 2, or wave B here, and then we've got 5 waves up here that we traded. We went long here and we basically got out up at the top here, which is nice. And so I don't know how to call this. So we can look at it as wave 1 and 2 here, and then going up for the third wave here. And the third wave here would have 5 waves in it, which is wave 1 here and 2 here, and then moving up for wave 3 here, moving further up here. So, you know, the banks are really sort of lagging in this, you know, in this recovery. You know, do you call them value stocks at this time in the cycle? I don't know, you know. I mean, and the retail banks, you know, they're losing a lot of business to you know, Cash App and those sorts of things. So Cash App have got more retail, got something like 40 million clients now, you know, so that's more retail stuff than, you know, a lot of these banks put together now. So you know, they're losing at the retail end now, these banks. So I don't know much about the fundamentals of things, but we can view this as an A wave, a B wave, and a C wave here as a corrective move up here. We're still not seeing really good impulse waves to the downside. So between this low here and this high here, this is the 61.8% retracement level here. So we've got support here. And yeah, so what we've done here, so look, first of all, we don't really want to see it moving down too much further than this. It could probably come down and cover the gap, and that's it. And this move here, we'll have a look at this here in a moment, but it's just, it doesn't appear to me. We've got 3 waves from here. We've got 1, 2, 3, 4, 5 in here. We've got an impulse wave here, then a correction, and then a move down here, which looks like a third wave coming down here as wave 1 and 2. So we went short here. We've done all the right things. I brought the stop down to just above 200 here. And it's possible that it can reject from here. If it's going to reject from here, then we can take this here, copy that, and put it under here for that. Because then, you know, too much further below this 61.8% here would make this here an A wave, a B wave, and a C wave here, and then we would be coming down further from that point. Right, so that's what we're sort of basically playing for here. But if this level here gets support, let's just look at this for a moment. Let's just say that this move coming up here is here. There should be some sort of, you know, reaction here, and then there will be a move above here. So if it moves above here, it will take out our stop at that point, and then we'll come down to this point. Now, this here, that becomes the long trade from that point there. We can go to there, and then we can bring it down, copy that, and bring it down to that point. So also to that first high above the level, that's really where the stop should go as well. That stop should go just above that first high above the level, because that's where the market can fail from here and continue to move down. And if it moves up, well, then it takes our trades out here and we continue to the upside. So we just switch from that. But at this stage here, we only have, you know, when I look at this on the tick chart here, just to show you here. So don't worry about the count in the bigger picture here too much. So we've got the move down through here, and then we've got a rally back up to the 50-60%, which we call wave B. And then when you look closely here, we've got wave 1 and 2 here. We'll call all that wave 3, 4, and 5 here. So that makes 5 waves here. And then we've got a corrective move here, and then this is moved nice and swiftly here, like a typical third wave in here. But then it's tricky for me to call this the fourth wave here, because it comes back and sits over wave one here. I'll get that overlapping wave structures, but we've only got 3 waves in this move here. We've only got 3 waves here. So unless we put, the only other way I could do this is A, B, C. No, it doesn't work that way either. So I'm just looking at various ways that it can fit. So really, you know, I was thinking that this looks impulsive to me. It looks bullish to me, but it could be wave 1, 2, 3 here, and then 4 here, and then down for 5 here. That's what I was thinking. But this doesn't look like a corrective wave here. It looks more like an impulsive wave that wants to move higher. But in terms of moving higher here, it would still need to see an A and a B and a C back here, or just continue to build to the upside. But anyway, I can't draw on this side, I have to draw on this side. But once again, if we find that this is the arrival here, the reaction here that we're seeing, then we'll have the first high above the level. That first high above the level, that's where it all happens here. So you can go get stopped out on top of that, and also go long here and go long over here for that. So that's what you'd be looking for. If it fails from this point, well, then we're okay at that stage. So just coming back to the 4-hour chart here, we can look to add below this low here. You could probably also you know, if this comes down here and creates a second high here, then you can use that one there, or even a third. You just want to lift it up under the low. So this low, then lift it up under that low, that type of thing, you know. So that's what we'll do. So if I this stop here, I'll just move that up here. Let's just set this up properly here. We've got time with this. So I mean, these are just tactics you can use anywhere. So we've got the arrival, the reaction, and we're looking for the first high above the level. So once that comes in and comes down, then we'll move our stop to that one point above that there. But at the same time, we can also use that there to go long there as well at that point. So that's our strategy there. It's loose, but it will be effective. Okay. Thanks for tuning in. Much appreciated. Cheers.